Hi, everyone. This is Joe Gentili. I'm a partner at the law firm of Saroff Gentili LLP, and a significant part of our practice is focused on helping people or policyholders with life insurance problems through litigation. And one of the types of life insurance that seems to come up probably a lot more than others is index universal life insurance, IULs, lots of problems with those. One of the most overlooked risks that I see with IUL, it just doesn't seem to come up as much as other problems with it, is the fact that carriers have a lot of discretion to change the terms after you buy the policy. So what I mean by that is index universal life has a lot of moving parts to it. There's the indexes themselves that are offered, which indexes are being offered, what are the caps being offered on that, what are the participation rates being offered on that. So a lot of levers just in how the insurance is credited. And then on the other side of the aisle, which are the expenses to keep the life insurance policy in force. Carriers typically retain a lot of discretion on that too. So if the cost of insurance for you every year is a certain price when you buy the policy, um, a lot of times there's very little that stops a carrier years down the line from changing the cost of insurance in those policies to make them higher or not to lower them to reflect if mortality is improving, if people are living longer and it shouldn't cost as much to insure people. So the carrier retains these levers to both make the policies more expensive to hold and also to credit less return for the money that you put in. And they can change this throughout the course of owning it. What makes this particularly risky, in my opinion, is the amount of time that people hold these contracts. So let's say you're 35 years old and you buy an IUL. Hopefully, you're going to live a long time to come, and most people will. So that policy may be in force for 5, 6, 7 decades to come. And over that period of time, undoubtedly, there's going to be major changes in the marketplace. The management team is going to turn over many times at the insurance company. The insurance company may get bought out by another company who may not be very committed to the life insurance business at all, or just may not care about the policyholders. So there's all sorts of reasons and incentives for a insurance company to change the terms after the fact if you give them that right. And you are giving them that right with an index universal life insurance policy. And this is in contrast to a whole life insurance policy where there are some levers, that can be changed. Probably the most prominent one, if it's a mutual company, is the dividend rate, but the cost of insurance is fixed. There's a lot of other guarantees in those contracts, and same thing with guaranteed universal life insurance policy. But with IULs, which is the fastest growing segment of the life insurance industry, as far as I know, lots of room for mischief for carriers to change the terms after the fact of purchase. So if you're shopping for an IUL, I'm not saying that there's no circumstance where it's appropriate to buy one, but just try to be eyes open about all the risks because this carrier discretion risk is a risk that's either, in my experience, downplayed by agents or is not fully understood and appreciated by a lot of the agents that sell these products. So, as always, if you have any questions, please feel free to reach out to me. And if you found this video useful, I really encourage you to subscribe so this way you don't miss future videos. Thanks. Have a great day.